Hi, this is Anthony Parent of Parent & Parent LLP, the IRSMedic, and in this video we are going to show part 3 of our 2014 Guide to IRS Offshore Voluntary Disclosure. And in this video we're going to discuss what the potential costs are, both for compliance with the IRS and also the types of professional fees you can anticipate. And a little bit about us. We are Parent & Parent LLP. We are tax resolution attorneys. We are based in Connecticut, and we serve taxpayers worldwide. And we have been helping people get through the offshore disclosure since the first initiative in 2009. So what we're going to do in this video is we are going to answer a few of the offshore FAQs, in particular 8 through 11. So we're going to discuss all of the programs available so you can get a basis about what types of fines and penalties you're looking at and some of the options available. We'll be spending some time talking about the standard OVDI with its 27.5% penalty. We're going to talk about the 12.5% reduced penalty and the often misunderstood 5% reduced penalty, the 0% penalty associated with the streamlined OVDI, and the 0% potential of opting out of the IRS OVDI standard program or 12.5. So let's first of all talk about a standard. And as you notice, here is a very sad face, and the reason why is because the standard deal is a bad deal for everybody but those who have intentionally engaged in tax evasion. If you did engage in intentional tax evasion, we think it's a great deal. The reason why it's such a bad deal for most people is because it's 27.5% of the highest account balance. Additionally, there's a 20% accuracy related penalty. But here's the thing, this 20% is based on your unpaid tax, whereas this is based on account value. So you can see the significant difference. Additionally, you also have to pay any unpaid taxes with interest. Then there's a 12.5%, which is still rather, can be a little rough. We'll find information on this in FAQ number 53. The requirement is that you have your account, the highest account value is $75,000 or less. And so here's a hypothetical for you. What if for one day, for 1 second, the highest value is $75,000.01? Well, would you believe you're totally out of luck if you can't find a more favorable and consistent exchange rate? That is, it has to be $75,000 or under. Then here is the 5% penalty, which everyone thinks they qualify for, but there's a reason why we see very few clients who actually use a 5% penalty, and actually we don't have anyone. And I'm going to explain the answer right now. Here's the requirements. We find these in FAQ 52. One of them is you have to be an expatriate. Okay, we have a lot of clients who are expatriates in compliance with the local taxes. Okay, a lot of our clients are less than 10%, less than $10,000 of U.S.-based income. That's a lot of our expats, sure. So it looks good so far, but here's the thing, this is what it comes down to. If you qualified for these, you also may qualify for the streamlined deal, which is better, because then you don't even pay 5%. Now let's say you don't qualify for the streamlined because you have high account values. So then okay, now you're going to say, well, if you have a high account value, and here's the example I want to use. Let's say that you qualify for this, but your account balances are $5 million. So what would your penalty be? Well, your penalty would be 5%. So that is $50,000. Or I'm sorry, let me do my math here. So if you're $5 million, if we say you're $5 million times no, $250,000. What? Right? $250,000? So here's the thing. If you're going to have to pay $250,000, and based on these facts, right? All of these facts, all these facts support an opt-out to argue for non-willful penalties at the least, which would be maybe $60,000, or no penalties, which would be $0. So that if the streamline doesn't work, you would opt out. because it just doesn't make sense to pay $250,000 when you have a total reasonable cause for not reporting everything. And so there's really the reason why this 5% just doesn't come up a lot for us. Now I want to talk about the opt-out of the standard. So this is what if you're going to opt out of the 27.5%, the 12.5%, or I suppose you could opt out of the 5%, as I mentioned. So you have a chance for 0%. Not a 27.5% penalty, but 0. Now, of course, there's a chance for something else, and what it comes down to is whether or not the IRS says you're non-willful. And if you're non-willful, pretty good right here. Let's put an O there. If you're non-willful, the worst case you're looking at is typically 6 years, so it's $60,000. It's going to be capped out. But if your account value is lower, you can even find some of the guidance of the IRS about why it's inappropriate to assess penalties. Penalties are only to ensure future compliance. And one of the things is if you're using any of the programs, you're voluntarily complying, and they must consider that when assessing any penalty. Now, the downside is if you do take advantage and you are assessed a willful penalty, that is very bad. That means a 50% penalty could be assessed 6 times. That's the maximum. That's a look-back period for the statute of limitations. So it might be less. But either way, twice would equal the account's net worth, and then if they did this is 3 times the account value. So it could really wipe you out. So that's just something you would want to be careful if you were engaged in intentional evasion. But for most people who have been engaged in intentional tax evasion, you don't opt out, because that 27.5% is a really good deal to clear your name and to get this behind you, and then you're free to do what you want with your money after, of course, you pay your tribute to Uncle Sam. Now, one question people have, because this is something we deal with every day, is they get a little bit freaked out about opting out because the IRS is, I don't know, I guess we're a little bit passive aggressive, because on one hand they say if you don't agree with these standard penalties, you have the option to opt out, and you're still going to be in the program, or just opting out and you'll be under examination and just to argue for a lower penalty. But then the FAQs, they stick this in here, and I just want to explain this. And if you watch what they're saying, it's actually pretty meaningless. Okay, because here's the question they ask. If I opt out of the OVDP and undergo a regular examination, is there a chance my case could be referred back to criminal investigation for penalties or prosecution? Okay, so if you opt out, well, see, this is actually clumsily worded, okay, because you're actually not opting out of the OVDP, you're opting out of the OVDP standard penalty arrangement. So you're still in the OVDP, okay? Once you opt out, then you undergo a regular examination. Okay, so let's just clarify that. Okay, so the other thing is, so we understand there's a chance you could be referred back to criminal investigation for penalties or prosecution. Okay, so what do you think is going to happen, right? If you opt out just to say, hey, I think this penalty is too much, do you think they're going to go and bring criminal charges? Well, here's your answer. Yes. Oh boy. Okay, that sounds scary, but let's read more. Criminal Investigations Voluntary Disclosure Practice provides a recommendation that you not be prosecuted for violations up to the date of your disclosure. If your disclosure is ultimately determined to have not been complete, accurate, or truthful, or if you commit a crime after the date of your voluntary disclosure, you are potentially subject to the penalties and prosecution. Well, let me tell you about just how meaningless this statement is, because whether you opt out or not, whether you take the standard penalty agreement or not, this is true. Okay, let's just say you pay 27.5%, but if you did not make a complete, accurate, and truthful, or if you committed a crime after the date, well, guess what? That's the requirement of the program, regardless of whether you opt out or not. So don't let this FAQ scare you at all. These are just the standard terms of it. And I mean, really? So will I be referred for criminal prosecution if I commit a crime afterwards? Well, what do you think? I mean, right, the OVDI is not something that, gives you carte blanche to do whatever you want. No, it's very limited that as long as you're being honest, they're not going to prosecute you. If you do something dishonest, yeah, they're free to prosecute you. Okay, now I want to talk about some of the professional fees involved. And we've seen a lot of people who have been unhappy with the representation. Some of them have used hourly rate attorneys, and we've seen people charge over $1,000. Not that they have any special knowledge of OVDI, that's just what they charge, and sometimes they'll charge $1,000 to open a letter. What we like to do is charge people a flat rate. That way they can make up their mind ahead of time if they want to use us or not. We do enough of these to know what we need to charge. Just to give you an idea, just to get your expectations in line, this is how to think about how much this is going to cost you. And what would you expect to pay for an audit for 1 year of your tax return? Okay, do you have that figure in your mind? Okay, now what would you expect to pay for an audit for 1 year of your tax return when it is a complicated foreign return that few people qualified to prepare and argue? Okay, now let's multiply that. Do you have that number? Do you have that number in your mind? Okay, now let's multiply that by 8 years. Maybe you don't need to do 8 years, but maybe fewer. But let's just say 8 years. Okay, so now you are thinking the right amount. You can see how quickly these fees can, this is at least how we come up with what our fees are. And the other thing too is there's many of those in the marketplace who thought there was just easy money by just processing people and marketing them on fear. And now they're leaving, and as we see that they're leaving because the work is more involved, more strenuous than they anticipated. So there's really right now there's a pretty high demand for those who can actually do this work properly, and we have a high demand for our work. And when we're doing an opt-out or we're doing penalty-based negotiations, there's going to be a bigger fee there. And when there's things such as PFIC calculations, and that's something that will come up if you have a foreign brokerage account or holding mutual funds. If you look at FAQ number 10 for what that is, you'll see it's incredibly complicated. You have mark-to-market calculations to make. Additionally, the IRS, you would think, because their workload with these OVDIs is really huge and it's taking them years to work cases through, you would think that they would streamline the process. Well, the opposite has happened. They make the rules more complicated and rules that contradict some of the FAQs, and we'll get into more of those. The IRS doesn't always follow its own rules, and you have to appeal to get them to do what they said they are going to do. So with all this, I hope you can, I hope you have your figure in your mind of what to expect. Those are the criteria we look at when we're quoting someone a flat fee to get them through this program, because that's really what it is that the IRS is going to be scrutinizing everything. And if you opt out, everything comes on the table, including any domestic income you have. So you probably have a pretty decent idea in your mind now. Now that you know what we're looking at what our fees are going to cost you, and then you probably have a decent idea of what the range of penalties could be. So undoubtedly, this is a big decision for you. And again, I don't want to scare you at all. I want you to do this because you just want to do it and get it over with. But we're not here to claim that you are going to be criminally prosecuted. Of course, there's going to be some that are, right? It's a small risk that for most people with unreported income, criminal prosecution, if you do get caught, it could be complete ruin. Really, your big issue is the fines. And here's the thing, is that it's going to, this is going to be going on for the next 5-10 years. So a lot of people are not going to do the program, and they're thinking they're getting away with it. But, with our years of doing tax resolution work, the IRS moves incredibly slow. But when they move, right, they slice like a hammer. When the fines come, it's going to come and it's going to overwhelm you. And it's going to be perhaps a little bit too late to undo some of the damage. And all these years going longer and longer before the IRS finds you, they're just giving you more rope to hang yourself with. That's what we always see. So it's just something where, it's going to be a bill at some point. So maybe you want to get it wrapped up now, deal with the bad news now, then, kick it down the can for you or your family to deal with later. Because, here's the thing. Some people are going to get away with it. Absolutely. People are going to get away with stuff all the time. They do. But then some of those people who do get away with it, well, do they really get away with it? Because, you know, they're never going to get a good night's sleep for the rest of their life. Now, this is just my opinion, and perhaps some of the opinion of others, perhaps your opinion as well. We believe that I believe that the OVDP programs are rather unfair and stupid, because it makes far more sense. You know, and the IRS made a significant miscalculation. They thought that most people with unreported accounts were doing it intentionally. Not the case. 96% of our taxpayers made innocent or no worse than negligent mistakes. So if there was any justice in this world, or if there was more justice, it would simply be a simple case like, hey, if you had domestic unreported income, you would just amend your returns, pay your taxes if you were just a regular taxpayer who forgot about some income. But that's not the case. You have this mysterious foreign income that should be treated totally different. So that is where they are treating, you know, they're treating you as a criminal. But really, the voluntary disclosure should only be used for those who did something criminal. But the IRS sort of has perverted everything, because they realize that, well, there's some big money involved, and then they get a press release out that says they collected $4.5 billion from the first two disclosures. Meanwhile, on the other hand, they let $4.5 billion go out in credits that shouldn't be allowed. And because of this, because, you know, we really understand you know, where you're coming from. That's why we work so hard, because this is just, you know, for our clients. I mean, our clients are, you know, travelers of the world. They see how the rest of the world does it, and we're stuck with this IRS who is, you know, in the Stone Age, worse. That's why we work so hard to get the best result. We know this is a situation you didn't ask for, that is completely unfair and stupid. So we want to make it take the sting as much as we can out of it for you. Now I'm just going to ask you to subscribe to this channel so you can be alerted to our updates when they are up. Look for part 4 of our 2014 OVDP guide. That'll be coming soon. And if you subscribe, you'll be the first to know. And if you're looking to talk to someone about making a disclosure, call our OVDP hotline at 888-477-4258 or email info@IRSMedic.com. This is Anthony Parent of Parent & Parent LLP, the IRS Medic, and I thank you for watching.